All right, so today we're going to be talking about how to settle your tax debt for less than you owe. You know, there are two things you need to understand first. That's the statute of limitation. The IRS has 10 years to collect on any tax debt that you owe. And another thing is your reasonable living expenses. There are no excesses. The IRS allows you to be able to afford to pay your house rent or your mortgage or your car note. But if you start doing excesses, that's not acceptable. So reasonable living expenses, remember that. Now let's talk about your options. So if it's been over 10 years and you had a tax debt, the IRS can no longer collect on you. So that means that it just falls off automatically, okay? But if you're still within your 10 years and you're thinking, how am I going to settle this? This is too much. Let me first remind you that your inaction could cause you more than action. Your inaction meaning you owe the IRS and you're not willing to pay them. You don't want to pay them. You keep running away from it. They could go garnish your bank. They could garnish your wages, They could levy your bank account, and they could also seize your assets. You do not want that to happen to you. You need to get ahead of it, get in front of it. Know what your options are so you can settle it. Living in fear, when you're fearful of it, it's because you truly do not know what's going on. You're just hoping they don't come for you. But if you look at your options and you do something about it, that way you're in control of the situation, and they can't just garnish your wages out of the blue, okay? So what are these options that you have? The first option is currently not collectible. Currently not collectible is beautiful because, it just basically means I can't afford it. I do not have any money left over from disposable income. At the end of every month, I have to borrow to make ends meet. I basically have to borrow. I live paycheck to paycheck. I don't have anything left over every month. So they look at your income and they look at your reasonable living expenses. And if they see that it's zero, they put you on a currently not collectible status. That means that they can't continue collection action. They can't levy you. They can't garnish your wages. They can't seize your assets. And the beauty of this program is, guess what? The statute keeps counting. It doesn't stop or halt the statute. It keeps counting. So that's why it's beautiful, okay? So let's talk about option 2. The next option is to apply for a penalty abatement. The penalty abatement is when there are different ways to qualify for penalty abatement. The first one is a first-time penalty abatement. Basically, the IRS looks back 3 years, and if they see that you have not any penalties, you don't have any penalties, you filed on time, you paid on time over the last 3 years, for no reason at all, you don't have to have an explanation. Guess what they do? They write off the penalties, and the penalties could be quite steep. It runs from 0.5% to 25%. So that's a beautiful way to reduce it and then see how you could settle it. If you didn't qualify for this, free for all penalty reduction, there are also other reasonable expenses reasonable excuses you could come up with. Like your mom was ill, you were ill, your kid was ill. As long as it's a reasonable expense that caused you not to file or pay on time, that's a good penalty reduction excuse. So we've talked about the currently not collectible. We've talked about the penalty reduction. Now, once you reduce your penalty, what other way can you settle it? There is the installment agreement, which we're gonna expatiate on. The installment agreement really works for people who, after the IRS looks at the disposable income, right, and they have maybe 3 years or 2 years left on their statute, and they owe $100,000. So let's say John had $100,000 in tax debt, and his disposable income is $100, and he only has 3 years left on the statute. So that's $100 he has left over every month times 3 years, which is 36 months. So that means they take $100 times 3 years, 36 months. That's $3,600, and he owes $100. He gets to settle that tax debt over the next 3 years by paying only $3,600. Tell me that's not a good deal. That is a good deal. So stop living in fear. You have to look at your situation and get ahead of it. Okay, every single person is different, but you have different programs that can work for you. Living in fear is not the way. Your inaction is causing you more than you know. So that's the installment agreement. The next thing is the offer and compromise. The offer and compromise, I know you've all heard it, settling your tax debt for pennies on a dollar, pennies to a dollar. It's a great program too, but not everybody will qualify. The installment agreement I just talked about may actually be a better program for a lot more people than the offer is. The offer, the IRS looks at your disposable income, and then they look at any assets you have. The equity you have in your assets plus your disposable income. That amount is what the IRS will accept from you as settling your debt. So in the situation of owing $85,000, if you have no assets, you have no equity in your assets, like you own a home, but you just bought it, you have like $500 only equity in your home, or maybe $1,000 equity in your home. They add that plus your disposable income of $100 times 12 months, whatever. So let's say you come to an amount of about $10,000 and you owe $85,000. You settled it for $10,000. right? $10,000 on an $85,000 debt. Now, the condition for an offer of compromise, though, is for the next 5 years, you cannot file or pay late. This is why this program, as beautiful as it is, it's not the best for everyone, because if you can't keep up with that, that whole debt comes back. For the next 5 years, you have to be on top of it. So I've given you a couple of options here. The currently not collectible, the penalty abatement, the installment agreement, and then the offer and compromise. These are programs that we could look at for you and see which ones you best qualify for. Get ahead of your problem. Your inaction is causing you more problem. Don't wake up one morning and you see your wages have been garnished. Don't wake up one morning and see that they've levied your bank account, or they seize your car. You're rolling down the, cruising in your car, and all of a sudden they hop up on you and they seize your assets. You don't want that to happen to you. Get in front of your problem. You could try and do this yourself. For the installment agreement, you could fill out a 433A and read the instructions and send it in. For the offer and compromise, the IRS has a pre-qualifier on their website. You go through the program and see if you qualify for it, and then you fill out a 656. But know that there are different nuances to every option. So you need an expert on your side. It's always best to have an expert present your case to win, okay? But you could also give it a stab yourself. So if you have any questions, DM me, or send me a message and I'll be happy to respond. So you'll have a beautiful weekend. It's beautiful here in Florida, and the sun is out, and I can't wait to go out there and enjoy the day. So you'll have a great weekend. Bye.